So this week we focused on debt to income ratios, and we devised that the formula for that debt to income ratio is the new house payment called the PITI, principal, interest, taxes, and insurance, plus all of your other minimum payments to car loans, student loans, credit cards, divided by your gross income. That becomes a debt to income ratio. We then looked at if we have compensating factors and automated underwriting approves it, we can go to 55% debt to income ratio, but conventional, we're going to be stuck at 50%. It won't go over 50%. And then we talked about student loans. Remember, if you are in forbearance, it's going to show us a zero payment on your student loans. But as lenders, we still have to take a percentage. So conventional Fannie Mae is 1%, conventional Freddie Mac is 0.50%, FHA is 0.50%. If you have minimum payments that are showing on the credit bureau, but they add up to too much, and you say you don't owe that, you can get an income-based repayment plan letter from the student loan company called an IBR, and we can use that. And if you're VA, we don't have to count a payment. If you get a letter from VA stating that it is deferred for 12 months from closing. So here are some other ideas on how you can lower your ratios. You could pay off a car loan. You could refinance a car loan. You can remove your name as an authorized user. You could pay off a credit card completely, and you can lower your balances on your credit cards under 30%, which will then lower your monthly payments. Don't forget to tell your lender that you get alimony or child support, and as long as you have income proof that you've been receiving it and legal documentation, they can use that. If you're over 59 and a half, you can take distribution from your IRA. And finally, you can add a co-borrower, either one that's going to live with you and you can use their income as well, or you can use a non-owner occupied co-signer. But before you go and you do all of these things, call me first or apply at melaniehen.com. I would love to help you analyze your entire situation and tell you what you need to do and what not to do in order to qualify for a loan.